Market making is a type of algorithmic trading strategy. And before crypto, it was really only available to hedge funds and other like large Wall Street institutions. But what's really cool about crypto is that we have something called direct market access, which means that every single crypto exchange allows free and open APIs that allows anyone to place orders directly in the order book. So for the first time, market making as an algo trading strategy is finally available to everyone.
Exchanges and token issuers spend around $1.2 billion a year on market making in the form of fees, rebates, and the cost of lent inventory. And if you spend any amount of time in crypto groups, you'll soon find the blame for poor market performance set squarely at the feet of the market makers. Seen as greedy, manipulative, and secretive, they've become the go-to villain for unusual and unexpected market behavior. But is it justified?
Actually, I do think that is true to a certain extent. And it's more because of how this industry has developed in crypto. Because what's happened is you have a lot of hedge funds that are doing this, and these hedge funds know finance really well. So they know like both white hat market making, where you're actually adding liquidity to an order book, but also kind of like various more black hat ways of trading, where you're doing a pump and dump scheme, or trying to like dump a lot of tokens onto retail investors. It is possible for an algo hedge fund to act badly. And so this is actually one of the things we're trying to prevent.
When Harmony launched onto the market following its IEO on Binance, part of the liquidity strategy was met by a bounty program launched on Hummingbot, an open source project led by former banker Michael Feng that allows anyone to be a market maker.
What we're trying to do is actually create a system that rewards individual market makers. So first of all, growing the supply of people who can do market making, but also creating systems and incentives that reward the good types of market making. So only compensating when someone is adding liquidity to the book and not doing things like wash trading or market manipulation. Our belief is that by opening up the possibility of market making to anyone, allowing a competitive dynamic to form, but also structuring the incentive structure so that you only get rewarded if you act in a good way, will not only level the playing field, but also inject a lot more transparency and openness into what is heretofore has been a very opaque and quite frankly, quite a shady industry. We actually started as a quantitative hedge fund that does market making, arbitrage, and other quant strategies. To be honest, it was when we discovered how bad it was. Certain market makers were essentially just ripping off projects that didn't understand finance, just charging them a boatload of fees, making them give them millions of dollars worth of inventory just for them to do their job. And we felt that given that the technology was available, the market was right for us to open source our technology and build this like data and analytics platform that will allow anyone to be a market maker.
Hummingbot continues to evolve as a product, and with their recently announced liquidity mining platform offering strong potential returns as part of a passive income DeFi strategy, Michael is optimistic on the future.
I feel like the tenor of the market has really changed a lot in the past year, where it's about building, not investing. To me, what's really exciting is, as an individual, there's so many more things I can do than I could do 2 years ago. What crypto is about is giving individuals, more power. More things, more power, more control over the financial future. And that's already happening. It's already available today. I would encourage anyone who has crypto to see how can I use these assets more productively in various ways. And I think that will unlock a lot of the real value of crypto.